Most people watch live trading streams. They're looking for someone to tell them exactly what to do. This is not that. This will never be that when you watch Bloom live trading streams. What I'm going to do is walk you through exactly how I'm thinking, why I'm thinking it, so you can eventually do this for yourself. So let's jump in. I'm going to share my screen here, then we're going to get into it. Charts open, 5 minute chart. See, we just pretty much broke an area that we've been consolidating within. However, honestly, this entire area has been an area of consolidation. And so you guys know me, I trade level to level. So right now, it's about 23 points to this next level. I do see a lot of resistance, a lot of resistance is the word that I'll use for this because I think it's the correct word. But I see a lot of resistance to the upside. And these 1 hour decision making levels are the physical representation, the visual representation of that resistance. Okay. Because as we know, the closer price gets to these levels, the more those levels act as force fields for price, aka that resistance to keep price from moving upwards. Okay. And so I'm mainly waiting for the break of this 15-minute decision making level. Why? Because this has been the area that price has ranged within, right? We have broken higher than this 4 hour decision making level. But as I mentioned, that 1 hour decision making level is acting as a force field to hold price down. If we just take a moment to look at price structure, because I think it's important. Like we don't talk about candlesticks. We will never talk about candlesticks, but I think it's important to just watch what price is doing. And if you notice what price is doing, it starts to make sense the more you see it, right? So if we look at those 4 arrows that I have right now on the chart, price has not made a higher low. Okay. It has not made or should I say a higher high? Excuse me. It's just been making higher lows, right? This was the higher high, higher low, higher low, higher low. And now we're at this higher low, right? Now, if we break above this area or this area or this area or this area, we may be looking at liquidity sweep. And why am and what is a liquidity sweep? That's essentially just price hunting where the money rests, right? Hunting the pool of money only to reverse and go in the other direction. Why do I say that? Because there's resistance to the upside. Okay, Marcus, that's the third time you said there's resistance to the upside. Why is there resistance to the upside? Well, that's when the macros come in. And so I'm going to pull up my Forex Factory from a news standpoint. I'm going to see what we're working with. Core PPI. All right, so we got core PPI came out 0.3% lower than what was forecasted. And if you don't know what core PPI is, it's simply the change in the price of finished goods and services sold by producers. In this particular core PPI, remember I said this last week, core PPI excludes the volatile goods and services that make this number fluctuate heavily, right? And so it was 0.3 lower than what was forecasted. And remember, that's what's the most important part. We want to look at what was expected and what was reality. And so point 3, if we look at history, let's see, we have point 0.5, point 0.5, point 0.7. So point 0.3 is not like crazy, but it's still off of what they expected, right? I still do think it could make a difference given how that specific data print is weighed against what is currently going on in the trading in the macro environment. Okay. We're weighing it. We're weighing the fundamentals, right? We're weighing the fundamentals because fundamentals, the same fundamental has an impact on gold in a different way, right? So for this example, core PPI, it being lower than the forecast signals that prices are not high for producers when they prices are not increasing from this distribution channel, right? From the goods and services sold by producers, the price has not increased. The price is actually decreased, right? From this distribution channel. So that's for this specific distribution channel, that means inflation is not a problem. Okay. If inflation is not a problem, that means if the Fed was only looking at this print, that means they would be more inclined to cut rates. Okay. Cutting rates favors gold because cutting rates has a barrier, has a downward effect on yields, right? And the appetite for the bond market, right? And so once that happens, gold increases. Why? Because gold is simply a store of value. And so if somebody can earn X amount, like people rather put their money in the stock market or the gold market rather than a 10-year treasury yield that's, paying 1.2% or 1.7%, right? Whatever the case may be, right? Remember, put their money into the other assets. And so when that's when we would be in a risk on environment, um, in which gold could actually thrive in, right? Because rates coming down also put some downward pressure on the DXY. And we know the DXY in gold move inversely, as do yields in gold. They typically move inversely. There are situations where DXY and gold will rise together or they'll fall together. We've seen those situations as of late because of the kind of the inflation woes. But we've gotten to a point now where yields have risen due to stagflation, no growth, and inflation is creeping higher due to the oil crisis, right? And so we start to piece all these things together, and to loop it back around to what I was saying about this is we need to weigh the fundamentals because this print, it actually favors gold, but the current macroeconomic climate does not favor gold, right? It doesn't favor gold right now. And that's just my humble opinion. Like, could I be wrong? Yeah, I could be wrong, but I'm just going off of what I see and what I understand, right? So, right now, gold's climbing up. Gold's climbing up. It's went and attacked this area here. It went and attacked this area here. I didn't plan on taking a buy at all because it's just not enough room for it really to make sense to me, right? There's a few things I'm noticing from a technical sense, right? And let's just look at the MACD at the bottom of the chart, right? And so you see where the MACD currently is right now. You see where the signal line is right now. You see where the volume is right now. And if we just look left to get right, right, we see where the volume is on this side as well. And we could agree that they're at very similar heights right now, right? We can agree that they're at very similar heights right now. Also, the point in which the MACD was at that high, right? So let me do this. That peak, right, is a very similar level to this peak, right? And so this is just this confirms the force field type of nature that is currently happening right now, because we've reached a certain point as far as buyers potentially being exhausted at this close to this 1 hour decision making level, right? Just because price is right here and it's not actually touching this level, that I am interpreting that. You don't have to interpret it this way. I'm interpreting that because I use decision making levels, but and I understand the principles in which they operate within. So, and the closer that price gets to it, the more it acts like a force field, right? It doesn't, and the closer and closer and closer. So, price did start 21 points away, 22 points away from this decision making level, right? But now it's only 8, right? So the closer and closer it starts closing that gap, the more and more downward pressure that decision making level is going to put on price, right? And so that's what I interpret. And so, and then how can I like validate that being potentially true? I can look at the MACD, I can look at historical context. And so, like, this is how I'm thinking about it from a technical sense. I don't care about falling wedges and butter knives and hanging ducks and like all of that stuff. Like I don't care about that stuff. A big reason why I don't care about it is because they're retail chart patterns. Right. I want to look at the stuff that institutions are looking at. This 1 hour decision making level, this 1 hour decision making level is at 4822.5. The point fives and the point zeros are institutional levels, right? That's where institutions play at. They play at institutional levels. They play at whole numbers. Look at this 4 hour decision making level. What institutional number is it literally right by? 4799 point or 4800. It's right on 4800. Look at this 15-minute decision making level. What is it right on? 4777. Also an area where we had a very strong wick that happened. You know what I'm saying? So you start to put these those that's what I'm focused on. I'm focused on what the institutions are playing at. I'm not focused on what retail money is looking at, right? Because I'm not looking at the same game as retail money, right? I want to look at this game like the institutions, and that, my friends, is why the macros are so important, because they tell the truth and you can't hide them. You can either just ignore them, you could be aware of them but not know what they mean, or you can study them and learn them and understand how to use them. Remember, the charts, the technicals is just the what, the price is the why. Okay, so but that's how I think from a technical sense. Like look at that what we got just now. Look at what we just how many traders do you think took that buy? Because they thought price was breaking out, right? How many traders took that buy because they thought price was breaking out? Did I think price was breaking out? No, because and I'm not gonna say I didn't know if price was breaking out, but I was thinking about the fundamentals, and the fundamentals were telling me that, okay, this is kind of strange that it's doing this because, yields have been elevated. We have the U.S. Iran Strait of Hormuz um, conflict going on that actually worsened yesterday, which basically says that the oil supply shock could also worsen, which is where we creep into this stagflation environment. GDP dropped in the last quarter We seen the labor market kind of cooling, and so when we're talking about growth cooling and prices rising, that's where we get stagflation from. And gold does not thrive in a stagflation environment, um, because that's when yields rise, dollar will rise, and gold does not thrive in a stagflation environment. And so I think that stuff's important for us to understand. And, when I saw price doing that, I was like, it's a little strange. It's a little strange for no pieces of change. You know what I'm saying? Um, so yeah, from a technical sense, that's what I'm looking at. But I'm always rooting it in the fundamentals. I'm always thinking about the fundamentals and how they're playing a role, within anything that we're doing. Right, man. I just went on a crazy, like, that was a crazy rant, and I forgot to turn my camera on. That was a crazy rant, and I forgot to turn my camera on. But it's all good. It's all good. It's all good. It's all good. Let me go turn my camera on real quick. You guys probably like, Marcus, your camera is on. Nah, nah, nah. I need my camera on the back end on, y'all. I gotta get that content. I gotta get that content because I be forgetting sometimes. I'm not gonna lie. I be forgetting it because I just get on here. I be so excited. I be so excited to get on here. Can y'all still see me? Yeah, y'all can still see me. I'd be so excited to get on here and connect with the YouTube, with the Bloom tube. I'd be so excited to connect. But all right, let's go. Here we go. Here we go. Here we go. Stop that. Start that. And we live. We should be live. We should be live. We should be live. All right, let's get it. All right, let me get back to what I was doing. I was looking at the 5 minute. Okay, from a technical sense. Okay, PPI. Okay, no other news today. And so, what I'm gonna do now is I'm gonna use, some tools I've been building on the back end. I ain't gonna go deeper than that. But I'm gonna do a little macro research real quick, and kind of get up to speed on what's happening right now. So let me do a little macro research real quick. Get up to speed on what's happening right now. As of today, I have Google Gemini, and some ways I instructed it and information that I gave it actually create a daily, like, I don't even have to do anything. At 5:30, it's right there in my Gemini. Um, but I've created something better since then, so I'm gonna use that instead. So if you see me looking down and you hear a little tick 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 tick, I'm just typing. Just wait a second. Just wait a second. Price isn't doing nothing right now, but I want to put some color behind the price because my candlesticks are white and black, so we need some color behind it. No, I'm just playing. No, stand by, stand by. All right, let's let that work. Let's let that work. Let's let that work. And no, no, y'all, I'm not. Don't even do that. Don't even do that. I'm not gatekeeping nothing. We don't do that. We don't be gatekeeping. Just be patient. It's just yeah, we just be patient. Just be patient. All right. We always, that's one thing that, me and Q from the first day, we really got into business together. I feel like we've always understood that this is about value. It's never about money. This is about value. We want to provide value to people. We want to build our values. We want to be valuable, right? We want um, to be a resource for people. And we understand these tools are resources that we can utilize to develop ourselves, to grow our finances, to take care of our family, to teach the youth the community, right? There's a number of ways that we can use these tools, these resources. And so you um, never neglect the fact, or never, that's not the word I'm looking for. I don't even know. I can't even think of what, but what I'm trying to say is, why don't I literally know the word? Just always know we gonna do the right thing within our business for the people that we serve. There's an actual word for that phrase that just completely left my brain. Um, but this is over here. Let's see. So is it finished? Okay, this finished. All right, so we got main idea. The world is repricing U.S. institutional credibility in real time through trade aggression, Fed independence, risk, and dollar erosion. And gold is absorbing the exit from the dollar dominance as both a refuge and a structural conviction. Let me make sure this is giving me. What's the date today? April 13th? No, today's the 14th. All right, so that's the thing. And price ended up moving right back, right up to this. Okay, pay attention. Let's pay attention to exactly what I just talked about from a technical sense. Understanding the fundamentals. All right, and let me just give y'all some more because y'all need to understand why I'm saying this is my perspective of the fundamentals. This is how I'm thinking about the fundamentals, how I'm thinking about what price is doing, how I'm thinking about where the market is right now. This is how I'm thinking about it, right? And so right now, there are no rate cuts even priced in on the table at all, right? No rate cuts at all priced in. Why? Because of just stagflation environment. And we'll just call it that for now. I'm not going to go deeper than that. Just call it that for now, right? And so this doesn't bode well for the gold market. Just this one component doesn't bode well for the gold market. And so let's say let's say hypothetically there are four components. That means just this one of those four components doesn't bode well. Three other components of the four could bode well for gold, right? I'm not saying there are exactly four because there are a number of them, but that's what I'm getting at, right? But remember, like we talked about this before, gold thrives in two environments. And look at that wick we just got. Sheesh. Gold thrives in two environments: policy driven or fear driven. What time is it? Six. What is that? A 6:39 candle? Yeah, that's why it's funny for like. No, I'm not even gonna say that. Just noticing the patterns. I forgot you guys couldn't see my screen, but yeah, it's over here. Just did a crazy candle. Let's look at the 1 minute. Let's just look at that. Just quick spike. But remember, where are we operating at right now? This is beautiful. This is a beautiful example of what happens when price moves on a force field, and the force field has the fundamental strength backing its force field like nature, right? Because this 1 hour decision making level, for price to move through it, it would have to go against what the fundamentals say. And I just showed you guys one piece of the fundamentals that would support it to be true that it would be very hard for gold to continue to rise. And so the April 14, 2026, the US naval blockade of Strait of Hormuz is the dominant macro event. It's a live energy supply shock, a direct inflation reacceleration catalyst, and the clearest test yet of whether gold holds its structural bid when dollar surges on fear rather than strength. Okay. And that's important right now. That's such a good line right there. Whether the dollar surges on fear rather than strength. So what does it mean by that? So when the dollar is strong from just an economic sense, um, the dollar will rise because it's attractive. It's attractive. The yield market is attractive. And I don't want to say the equities market is attractive because we typically need a I'm not gonna say weaker dollar, but we definitely don't want the dollar rising if we plan on getting in equities or stocks because that just makes the stocks more expensive to purchase, right? So when the dollar's low, when the dollar's cheaper, stocks are cheaper to purchase. And so that's when we get in a risk on environment, when people are looking to take on more risk because the dollar's cheap, stock market's rolling, right? Because the dollar's cheaper, yields are typically down. And so the next likely investment is either gold or equities. And depending on the climate, depending on what's happening geopolitically, um, that equities market might be the play or the gold market might be the play. So I think it's important to know that that's kind of what I was talking about earlier. Gold can rise in the same environment as the dollar, right? Let me see if I can share my screen real quick. Yeah, y'all should be able to see this. Oh no, y'all can't see that. Y'all just see a small, tiny screen. Let me get off of that. Let me get off of that. I'm moving forward on this research. The Strait of Hormuz blockade went live today, and it is a genuine macro shock after the Islamabad peace talks. Islamabad peace talks between the U.S. and Iran collapsed on April 12th. Trump declared a full naval blockade on Iranian ports effective at 7 Eastern time. Okay, or it's 10 Eastern time, 7 a.m. So okay, this morning, this morning, the U.S. Navy is now intercepting ships that have paid transit tolls to Iran. Mm. Oil has already broken above $100 a barrel. The transmission is direct. 20% of global oil supply flows through that strait. This is not a geopolitical headline. It's a live inflationary shock on top of an economy that is already running hot when it comes to inflation at 3.3%. Every rate cut expectation gets repriced from here. Mm. Yeah, so that is the driving macroeconomic factor. Okay. That's at the top. And so then we just branch off from there for okay, what is that straight impacting? Okay, we saw a supply shock. How is the supply shock impacting the market? Okay, inflation's running hot. Okay, how does inflation impact gold? Okay, inflation impacts policy. Okay, how does it impact policy? And you know what I'm saying? We just go down that decision path, that thought tree, that thought path, and we will reach a point where there's only that we can conclude something. We can reach a conclusion with the understanding of we don't know what's gonna happen. And we're just speculating as best as we can. As best we can. That's why there is no perfect strategy. Now, I do believe that if you have two strategies, one works on the one has some fundamental rules built in and one doesn't. I do believe the one with fundamental rules will eventually over time win and be better than that other strategy just over time. Just that's just what I believe, because I don't think you can ignore the fundamentals and be successful in trading for long periods of time. There's people that have done it. Maybe they have done it. I'm not saying it's impossible. I'm just saying it would be more difficult, in my opinion, because you're missing a piece of the puzzle, right? That's kind of like when I needed to take my commercial insurance PNC, property and casualty exam. That would be me like only taking, you know, only studying half of the test, like literally break it into half. So say it was 20 chapters long. Only if I just studied 10 chapters and just ignored the other 10 chapters, and expected to pass, right? That's what I kind of relate something like that to, if I was missing a piece of the puzzle. Um, but nonetheless, right? We're simply just speculating. Um, that's what I'm observing from what's happening from a technical sense, and why I wasn't inclined to ever at any point enter a buy. And that's why I like being on these live calls, because I take less risk. When I'm not on these calls, I just take more risk. But I like to. This is where I like to trade. This is where I like to be. This is why I like development as a trader is so important. Like, people think it's all sunshines and rainbows and watches and cars and these just like all this stuff, and it's a process, you guys. It's a process. It's a journey. Like, you don't know when that next like moment could be that moment. You know what I'm saying? Like, there's a guy listening to on well somebody that narrates somebody that used to be alive within the stock market. His name's Jesse Livermore, around I think like 1800s. But he says you're 3 to 8 trades away from being the trader that you can be, like, in a row, right? 3 to 8, and that's not a lot, right? But when you're really within the game, um, each trade is intentional. But you also understand that 3 to 8 trades, that is somewhat, it is telling. If you really think about it, it is telling on if you're following your plan, like, to a T, front to back, right? And that is where I am I'm moving closer and closer to that, to being that trader that I know I can be, right? And once I get there, right, the P&L will speak for itself. I've passed plenty of trading combines at this point. I think like 4 to 5 at this point. Like, I'm on my Express funded account right now, um, but I just keep blowing it. I just keep blowing it, and why? Because I get my risk management. I get detached from it, because I get greedy, or I get hopeful, right? Or I get what's I'm looking for? Like, I just want to get in a trade. I'm not patient, right? And it's because the money's on the line, right? I get, like, anything I make from zero, right? I'm getting some of that, and that's natural. It's human, right? And but we, I just, I'm more. I just need to be more conscious of it, because, like I said, it's a process, right? And most traders can't even pass a trading combine, and I've done it 5 times at this point. Right? 4 times at this point. I don't want to overshoot myself. Um, but I've done it at least 4 times at this point. And so that's something that I can look and say, okay, my approach isn't wrong. Like, and it is, because it's very easy to, like, spiral and, like, think like, damn, I keep blowing these accounts. I need to go change my VXT system. I need to stop looking at the fundamentals. I need to delete these decision making levels, right? It's easy to spiral, but it has nothing to do with the strategy. Like, I know that. I've seen it. It has nothing to do with the strategy. It has everything to do with my risk management and my psychology, right? And my emotions that I let drive my decisions when I am actually in the funded phase, right? Um, so I just want, and anybody watching this, to know this is a journey. This is a process, but it always kind of baffles me when people don't want to trade because it's like, what about trading don't you want the reward of? That's the question that I would ask. Like, what about trading don't you like? Let's start with that, and then because there's things that you may not like about trading that you put up with elsewhere in your life that doesn't reward you in the way trading does. You know what I'm saying? So like, like just what about trading wouldn't you want for like the benefit of, especially the way we approach things. We personal development, like mindset, understanding how to think about money, understanding how to think about risk, understanding how to operate within uncertainty, understanding how to not let fear drive your decision making. Like those are characteristics that you can use in anything. Like we haven't even talked about the financial reward, the monetary reward of trading, right? But I can talk about plenty of other things that trading provides for us outside of the monetary reward. But we're gonna get to that because let's not be confused. Look, I'm not on here to just make freaking credits. It go to Peter Piper. Like we on here to make money. Straight to it. We on here to make money. That's why we're involved in this market to build generational wealth. A piece of this isn't our only avenue to generational wealth. This is a piece of the different tools and opportunities and access points we have in this world to create generational wealth, and leave an inheritance for my children's children. That's the point, bro. That's the point. And like traders, like they're not out here guiding people in the way that they should be guiding them. And I'm not saying all traders, I'm saying majority, and it's painful to see. And I see people trading all the time, and people ain't out here guiding people in the way that they should be. But that's just like any industry. And so that's why when y'all get on these Bloom live streams, when you hear any content from Bloom, any content from co-founder of Bloom Entities, Quinn Gulliford, any content from co-founder of Bloom Entities, Marcus Williams, anything, we're doing things as Rob Proctor would do them, in the certain way, in the certain way. But then we apply VXT to it, and we do them in the certain way, and we do them that way over a long period of time. And that is when we reach mastery. That is when we reach mastery. I haven't got much yet. Let me finish up what I was saying on the research that was output. Because now it's gonna touch on gold a little bit, and it's gonna touch on the Fed, but maybe just give you some things to think about, and just so you guys know, like I know you guys know you're like, oh, this guy's using AI, bro. Let me freaking show you that, bro, because you think that I'm just using AI. No, just play it. I'm funny. All right, let me get out of here. I should nah, because I want y'all to see like I'm just using the tools. Like I'm just using the tools. If you guys aren't familiar with this, I'm not gonna go into it, but this is Claude. I have built my own macro research skill for it to conduct research and look at things in the way that I want them to be looked at. Right, now I focus on things, but then it cites my sources. Right, it's like these are all legit sources that I've probably came across. I've researched myself or whatnot, so I'm confident in those. But this is what I want to look at. So gold is pulling back intraday, but the mechanism matters more than the move. The sell-off is being driven by a dollar spike from risk off flight, not by change in gold structures. Case when fear spikes hard and fast, the dollar initially catches bids and gold gives ground. This is the standard short-term squeeze, the underlying demand stack, central bank buying, Fed credibility discount with Powell's term ending next month. Inflation acceleration from the oil shock remains fully intact. The question isn't whether gold falls today, it's whether the dollar can sustain a genuine risk-off rally when the U.S. itself is the origin of the shock. That's interesting right there. That's interesting right there. So what this is saying is, even though the dollar is rising, like it's just catching those early bids to risk off, right? Because those early bids to risk off put their money in dollars, not to just hold dollars, not to just hold dollars. I saw something the other day that China, and this is kind of interesting to think about. China is one of the few countries that has not been selling dollar reserves, but instead acquiring more US debt. Think about that. In this current environment, they have been one of the few countries that has been just acquiring US debt. Because that's what treasuries are. That's what the bond market is just US debt. It's government debt. So Japan has the bond market, China has a bond market, everybody has a bond market. It's just US debt. Um, and we don't need to get into that too much deeper because I can be on that rabbit hole forever. But and so when we think about just the dollar, just that phrase right there, like the dollar, the what we're focused on is whether the dollar can sustain a genuine risk-off rally when the U.S. itself is the origin of the shock, and that's just referencing just the geopolitics between the U.S. and Iran. That's referencing the inflation. That's referencing a handful of things. When it comes to the U.S. being the origin of the shock, the Fed is now caught in an impossible position. Man, that's funny because that's funny because when stagflation's happening, it's difficult, right? Because if you cut, like, you risk inflation getting more out of hand, right? You risk prices getting more expensive. If you restrict, you risk growth completely falling off, right? That's what stagflation is. Stagnant inflation. Um, Oil above 100 reaccelerates inflation just as Chair Powell's term expires in May 2026. That's interesting. And markets are already pricing political pressure on his successor. The Fed cannot cut into an oil shock without credibility damage. It cannot hike into a slowing economy without triggering a recession. That policy paralysis combined with fiscal deficits, tariff driven stagflation, and dollar weaponization concerns is exactly the macro mix that extends gold's structural bull case beyond any single day's price action. That is very, very interesting. I will say, I'm not gonna lie, that is very interesting. It's getting my wheels spinning a little bit, right? Because there's a great point being made right now, right? And I've been weighing stagflation being heavier than Powell's term coming up and the market's pricing that in, the credibility damage of the US, right? I've been weighing stagflation higher than that, right? So like I said earlier, we have to weigh the fundamentals, right? So that's very interesting to think about. And with that, I'm gonna let you guys ponder on that as well. So where I'm currently at right now, let me just pull up my chart real quick, just so you guys know what I'm personally looking at. I am still liking, at the very least, us to go grab this liquidity. Us to go grab this liquidity. But I can understand the structural bullish um structural bullish narrative of gold. However, I won't look to execute on that narrative until we break this last 1 hour decision making level, because this is essentially a no trade zone for me, right? Like I told you at the beginning, I never planned on taking buys within this area because it wasn't rewarding enough. And so I'm okay with missing out on 30 points, right? Like if we really do have some bullish pressure and bullish momentum going again, then I'll look to enter on this one and execute on, about 50 points, um, and so on and so forth. So I'm not looking for buys this time. I'm just kind of observing, well, not kind of, I'm observing how the DMLs, my decision making levels are communicating with price. I'm observing how the MACD is operating. That's what I'm looking at. I'm just looking at that, not looking for buys. I will take a sell. However, even like I said, this area to this area, it's not rewarding enough. So we're gonna have to wait. We're gonna be patient. We get to wait. We get to be patient, for the opportunity to come in that suits us, right? We know at 7 a.m. that blockade is pretty much live. So to be curious to see how things unfold this week. But dive into some of the stuff that we talked about today. Like share something in the comments that you found out that maybe I was incorrect on. Like I have no problem with any of that. Thursday, we'll be back live again. Q will be live Thursday. You can always join us in the Bloom Circle community. The link is going to be in the show notes of the description. But other than that, I hope you guys learned something today. I hope you can understand how this actually allows us to see the market clearly and not blindly, and really understand the why behind the what. But other than that, I am Bloom CEO, E to the H to the M, or you can call me Marcus, or you can call me next Tuesday. I'll see you guys then. Peace.